Hello, chart watchers and Decision Point faithful. Welcome to this Monday, November 1st, 2021 episode of Decision Point. My name is Erin Swenlin, and I'm the Vice President of DecisionPoint.com. And I am here with my father, Carl Swenlin, who is President of DecisionPoint.com. How's everything going for you, Dad?
Good, feeling very presidential.
Presidential. Yes, as the president of DecisionPoint.com, you should be feeling presidential. How is everything going for you up the hill from me?
Oh, I'm just sitting here waiting for the Fed's announcement Wednesday.
Yes, as I think most of our investors are, everybody's very curious what's going to happen there. Let's go ahead and take a peek at our agenda, and we'll talk about that a little bit more. We have our SPY and indicator overview, of course. We had some climaxes last week, so we'll take a look at those. We're going to go into natural gas, of course, because that one's looking very interesting right now. And then I'm going to look at our sectors in a CandleGlance just to get a feel for what the momentum looks like, what the trends are looking like, and we will review those. I'm going to delve in for sure into the healthcare section. That was my sector to watch going into this week, and I think it still looks very healthy, no pun intended. And then I'll finish with my diamond of the week that does happen to be in the healthcare sector. So without further ado, I'm going to pass it to you, Dad, after I go through these charts.
Okay.
We have our live trading room on Mondays. I had that this morning. It is free. If you go and sign up for our newsletter on DecisionPoint.com, you'll get the information on how to attend those live trading rooms, as well as getting the recordings for those trading rooms if you can't be there live. And then I did want to show everybody our sector scoreboard. And right now, everything is in the green. We're just waiting to see if comm services can come up with a buy signal. But we'll look at that chart a little more closely because it's still pretty far away, really, when you look at the price point and where it is in relation to the 20 and 50-day EMAs. All right, but let's go look at some charts. And yes, now I'm passing it to you.
Good, thank you.
I have to get through my spiel.
Okay. So we've got a nice rally up from the September, actually it was an October low, but the decline was September. They say that this September is the coolest month, and it was kind of not nice this year, but it was just not a very vigorous down trend. So I wrote an article published last week, where we hear a lot of people talking about how we're going to see a melt up in the market. And so the question was, will there be or can there be? And we'll look at that further down here. But first of all, you can see we certainly got a nice shot at it right there. A good start with a nice squirt up for that low from that 1 month decline. But right now we're less than 2% above the prior high. So the melt up's going to have to be a lot more higher than this. It's another daily chart for 1 year, and PMO's getting a little not too overbought. OBV is a negative divergence. We got new highs in price and still a lower high on the OBV. Advanced decline lines. The advanced decline line is confirming the new high. The advanced decline volume line is not. Let me go to the next one I wanted to see. Okay, broad market indexes, S&P 500. The silver crosses are, well, S&P 500 is at 62, which is a great improvement from the low last month. Still, we're quite a bit lower than where we should be in an advance, but at least things are improving. NASDAQ composite also improving, as well as the NYSE composite. New highs and new lows. We did not expand new highs today, even though we did make a higher high on price, but not significantly, as you can see. The Silver Cross indexes for the top, for the three S&P indexes, we did the 500. Mid caps are making a new high. It's a strong move today. And the Silver Cross is new high on that has exceeded the one last month. Same for the small caps, it's SP 600. No, I won't look at that one. Okay, climax assessment. What we have here is actually we have one of these indexes that we have a climactic reading. All the rest of them are fall very short of any climax. So somewhat of a climax. This is the S&P 500 up divided by the down volume ratio.
So we may end up with somewhat of a climax today. Doesn't look like net AD is cooperating though.
No, the net AD is not, net AD volume is not, it's well below what we would like to see. Bias assessment. We've got, I guess, like we saw, we've got an improvement in the Silver Cross Index for SP 500. What I'm seeing here, though, we haven't updated for today yet on the stocks above the 20 and 50, but you notice there's a downtrend while prices are going higher. So I think we're in for some kind of a down pop, but I wouldn't want to guess what it would be. But the logic that I used in regards to a melt up, we have a lot of improvement we can make here on all these indexes. So I think that, you know, we will be justified in saying, yes, it could happen. Personally, I'm not putting any money on it, but it's certainly in the realm of possibility. I mean, there's room for this, for things to be much improved. I still am concerned the way the silver crosses have dropped off over time. We're still the lowest of the highs right now since May. And I'm to get a melt up, we're going to have a lot of money coming in on the lower cap stocks that are have been dragging this index down. Obviously, price hasn't been dragged down by that issue. The short-term indicators, again, we've got higher price highs, and these short-term indicators are dropping off. Same here. Actually, I think they ticked up a little bit today, but the thing is, these are diverging against price, so that's typically going to bring us some downside. The intermediate term indicators, Um, they're relatively overbought at this point, based on what we have seen since May. So again, this indicator is turned down. It hasn't updated for today yet, but the others have, and we're kind of overbought. I skipped over this chart, but it was something I wanted to talk about, kind of going on a side trip here. I'm thinking of taking the bullish percent chart off of this, off of the chart of the Silver Cross and Golden Cross. Basically, this follows the range roughly, and but it's a lot more active. And actually, what it does, it matches up with the stocks above their 50 EMA and 20 EMA. Let me show you here. There. That's not the one. Beg your pardon. Yep. Well, I lost my way. So let me move on. I just mentioned it. We haven't talked about it, you and I just thought I'd mention it in case anybody had objections that they had good reason we should leave that in there. I mean, obviously it'll still be available through StockCharts, but I don't want to, it's just too redundant. And I think that would leave room for something more useful. Let's move on. Bitcoin today, it's formed a flag and will probably go higher.
Yep, it's looking, the indicators look a little soft right now, but of course I would expect that, right? We're in a declining trend.
Right. Yeah, when you've got the flag forming, but here the stochastics are getting in the oversold area. The dollar index basically moving sideways for the last month or so. Gold improving since the September low, but again, it's a tortured advance. Something I wanted to show, we have the gold ETF, GLD, and but we also have the silver. I'm sorry, this is the Sprott Physical Gold and Silver Index, and that would be a good index to show sentiment on silver. Although there's this used to be called Central Fund of Canada, and it's split roughly between the same number of ounces, let's say 50 ounces of silver to 1 ounce of gold. So it's about a half and half split, but it's a good indicator for the silver, people interested in silver. Back on track, the gold miners coming back down. It looks like a possibility of reverse head and shoulders here.
Mm-hmm.
Crude oil bouncing up today. It's basically being controlled by this rising trend line at this point, and it's in this channel. Notice it did break down from this rising wedge, and now it's recovering.
Yeah, having that 20-day EMA in the bottom of that rising trend channel available, I had a feeling we'd see something like this rather than a breakdown.
And long-term T-bill bonds. Sorry, we've got a street maintenance out front. They're digging up the streets on detracted here. Again, it's been trending upward. I would say maybe I should draw a wedge formation here forming, which would indicate it's coming back down some again. And finally, the 10-year T-bond yield. And this is a flag formation. I'm not sure about the width on this channel, but sometimes it's an optical illusion. But right now it's trending down, and we've got a PMO crossover. But it looks to me as if we're headed higher on this. Could it be a big move on that tomorrow? And
all right.
I do one more.
Oh, yes.
UNG, we talk about natural gas all the time. I'm definitely not liking the looks of this now. This is clearly a head and shoulders top. And in spite of what we personally feel about fossil fuel prices going up, right now there's something else going on. And we've got a PMO top below the signal line. It's just not looking very good. You notice we have the high top here associated with this lower top on the on-balance volume. That's a reverse divergence. And again, that's not a happy picture.
So when we talk about a reverse divergence, before you move on, can you explain the what that means, why that's not a good thing?
Well, okay, you could not necessarily prepared to go all the way with that, but let's say a reverse here, we would be looking for confirmation, which would be a lower high. The fact that it's not, it means that there's a lot more volume going into this to get this lower price top, and that is a negative picture.
Okay. Yeah, I get asked that often, so I figured I'd let you talk about it.
Okay. And with that, I will turn it back to you.
All righty. Time for the vice president. All right. So yeah, you did have UNG up. So, I mean, I don't have too much more I can add to this. I did sell my position. We were looking at this I wrote an article, of course, and I wrote a bullish article, and that just probably guaranteed the fact that UNG was going to pull back. Right. But I talked about its personality and how it had come down to that 50-day EMA and was making its way back up, because it looked like this was our little head and shoulders right here. But instead, it came up, obviously, as you were saying, didn't even test those highs and then started to fall very quickly. And the loss of the 50-day EMA is a significant problem. It's still holding that $17 range, but as you pointed out, I mean, the indicators are pretty ugly. Stochastics are pointed straight down, and they're negative, not even oversold yet. So there looks like there's going to be a bit more of a pullback on nat gas. And, we had kind of a parabolic going here, and now we've broken that down, but it looks like the basing pattern might be down here around $15, $16 right here, where we had that breakout that really started to push nat gas higher in September. Well, so, I mean, the chart's pretty ugly.
It's in a bull market, and in a bull market, the bear patterns can execute, but they don't fully meet their projected expectation on the price decline. So I've remember this many times. So yeah, I think it's going to break down, but in fact, it really already has if you draw a line across those bottoms. But it could recover, say, around 16-ish.
Yeah, that's kind of what I'm looking at.
Yeah, scare some people out and now then get them back. I just can't see it going down big time.
Right. The supply demand and all of that. It'll be interesting to see how this proceeds. But yes, nat gas looking quite bearish, but we'll keep an eye on it because, as you said, I mean, fundamentally, we do expect prices to start rising here soon, and they haven't. So we'll be keeping an eye on that one for sure. All right, so I'm going to share with you the sectors in a CandleGlance just so we can get a feel for what's going on. So we can see the trend. Here's my 20, 50, and 200-day EMAs. And then, of course, the PMO is on the bottom. Clearly, leadership is discretionary. This sector is just going crazy right now. I don't know, could be the holidays coming up. Really hard to say, but certainly this area has just really been breaking out. It's hardly, you can see that rising trend hasn't even been, it's almost straight up and it hasn't been tested really. But the PMO is getting on that overbought side. So when I was looking for the sector to watch this week, I like to go and find, newer momentum and that sort of thing. And so healthcare was what really was kind of said, look at me, look at me. We had just gotten that silver cross buy signal here where that 20 crossed above the 50. And, so healthcare was starting to look interesting anyway. And we had the PMO turn into positive territory. But let's look at the others here a little bit more closely as well. So technology is breaking out. You can see above those previous all-time highs. XLRE, which was my sector to watch 2 weeks ago, a week ago, 2 weeks ago, is finally starting to top out after hitting resistance here at those all-time highs. It looks like it's going to be pulling back a little bit longer, so maybe not the sector to get into. Comm services is actually showing that PMO turning up above that signal line right now, so that could be really interesting. But at this point, price is below that 50-day EMA. I'm really not seeing a breakout in the price trend yet, but this does tell us that we might want to keep an eye on that sector for now. But
yeah,
I really am about
below the 20 EMA too on XLC.
Yes.
So there's no hope for it yet.
Yet. The PMO is saying, hey, knocking on the door, but you can look under the hood and you can see that participation in this sector is still really very low. So, I mean, I suppose if you wanted to go in there to bottom fish, but I'm not a proponent of that. Healthcare. This is, like I said, the one to watch, and we're getting close to the end. So I'm going to briefly go over this one, and then we'll look at my diamond of the week in this area. And actually, I ran my scan right before the trading room, and it picked up this particular stock, and I really like the look of it, as did most in the trading room. So here's that silver cross that I was talking about, that buy signal. And then on Friday, you can see it just peaked above those September tops, which is what gave me the high sign on it. And now we're seeing a little bit of continuation. I mean, it's staying above that area of overhead resistance, but the indicators are still looking pretty good here. PMO, like I said, just entered positive territory. And you can see participation is beginning to light up a bit more. When you look at the amount of stocks above their 20 and 50, these percentages, and you look at the silver cross percentage, which is at 42% or much lower than these two participation numbers, that does tell you that there is a bullish bias here in the short term, and that we could see that SCI continue higher simply because we have the participation under the surface to have that happen. Golden Cross is just about ready to move above its signal line for the first time since back here in the summer. So I think that healthcare is really starting to shape up well. And that brings me to this week's diamond of the week. And that is a healthcare provider. I actually was very interested in biotechs and pharma going into this week, but boy, when I ran my scan and this chart came up, I just couldn't resist. So as you can see, nice little short-term double bottom here. We don't have the breakout above the confirmation line yet, but notice that the PMO has turned up despite a top below its signal line. And so it is about ready to give us that crossover buy. You can see stochastics have just entered positive territory above 50 and are rising nicely. RSI, not in positive territory yet, but boy, it is also shaped very nicely, rising toward that positive territory. Notice that the bottoms on this double bottom, the second bottom is slightly lower than this first one. But when you look at the OBV, we have rising bottoms. So that's a positive divergence. Slight though it still is in existence. There you go. There's the lower low, then you've got the higher low back here on the OBV. And then looking at the relative strength, this is one of the things that I like to do is look at how it's shaping up against not only the S&P, but also against the group. But starting with the group against the S&P as far as healthcare providers, not outperforming per se, but certainly performing in line with the SPY. These are the two that are most important. We have it performing, SEM is performing very well against its industry group. It's starting to show some outperformance. And then, of course, the very important of these three windows is how is it shaping up against the SPY? And as you can see, it's starting to shape up nicely and outperform. So I was very happy with this particular chart. I also am going to show you, since I have just a minute, here's the pharma chart that I presented to my Diamond subscribers on Friday. As again, this is an industry group that I would be paying attention to right now. You can see it's in a really nice, solid uptrend. We almost have a silver cross buy signal. RSI is positive. PMO just hit positive territory, and you're seeing stochastics staying above 80 and oscillating. So with stochastics, yes, it's overbought, but it's okay if it's overbought as long as it stays that way and oscillates above that 80 line. You can see what happened to price back here while it was overbought and oscillating right in there. You still were seeing a really nice price move to the upside. And this is telling me that this rally should have some staying power. The question will be this week, of course, is whether it can get above this area of overhead resistance, which looks fairly strong. So that's what I'll be watching. But you can see that the pharma group today was down slightly, but I would say that that might offer you some opportunities within that group to look and be prepared for a possible breakout here, because it is looking pretty healthy right now. Yeah, and I used that pun again, but I didn't really mean to. So that's all that we really have for you today on the Decision Point Show. Any parting words?
Good trading.
Happy trading, yes, indeed. We will talk to you again next week on Monday, so stay tuned for that.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.